So on to Deep Yellow. Do they have a choice to not have the Chinese involved?
If you are surrounded by CGN, CNNC, all in that region, I just think the path of least resistance for them would be to have a Chinese off-taker, because that's just where they operate.
This is general advice, my opinions, and for entertainment purposes only. CFDs are high risk, past performance isn't reliable. I may be long or short CFDs and stocks mentioned. Content may contain language that offends some viewers. Righto, punters, we've got another one of the, let's call him the global uranium expert. Mr. Benjamin Finegold, Head of Research and Director at Ocean Wall, and he's kindly donated his time after Indaba. Appreciate it, mate.
Of course, no problem at all. Happy to be here.
Mate, last time I spoke to you, I reckon it was a couple of years ago, and you were in deep on Trans-Caspian shipping routes, in amongst the whole Russia blockade on uranium. Everything was going on there. Mate, what is the equivalent of that in your life at the moment? What is tickling your whistle in the world of uranium and nuclear? What are you deep on?
Oh, it's a good question. I remember that summer being spent with a 6x6 map of Kazakhstan, trying to work out where the bottlenecks were. Our focus is still very much in Kazakhstan, actually, particularly at the start of this year. We've been doing a lot of work on the mineral extraction tax sort of implementation, the hike that came in. That's something that we think has been fairly misunderstood by some of the larger sell-side banks. So Kazakhstan's still a huge focus, geopolitics, obviously, and the nuances around that. Trump keeps you pretty busy on that front, guessing what he's going to do next. But also now looking, the investment universe has grown so much the last 2 years. We're now screening about 160 different stocks just in the nuclear industry. About half of that's across fuel, and about half of that's across the sort of build out. So yeah, we're keeping ourselves busy on that side and seeing some interesting deal flow in this space. And what's been amazing is conversations we had 5 years ago. The sector was pretty uninvestable for institutions, and now that couldn't be further from the truth. So a lot's changed. I think even more so than we could have imagined a couple of years back.
I assume by what you mean about the Kazakhstan side of things and Kazatomprom being misunderstood are you saying that people are underestimating the likelihood that they're going to nationalise all their assets effectively?
Yeah. So again, very briefly, they had a flat 6% tax rate on any production, and then they announced, I think about 18 months ago, that was going to go to a 9% flat rate while they worked out exactly what the new form mineral extraction tax, MET, was going to be. And then their new MET essentially tiers their tax rate based on the amount of production that you bring out of the ground. So the largest assets in Kazakhstan, if you're producing, call it 4,000 tons a year, think about that as circa 10 million pounds in our language. If you have a mine producing that much, you can be taxed 18% on that. So 3 times what you would have used to 2 years ago would have been paying. And then they also have an additional tax on top of that, which is to do with pricing. So at $120 on your largest mines, the Kazakhs could be paying over 20% tax rates, which, as Tim Gitzel said a year and a half ago when this thing was announced, he's like, that brings your cost, that brings your production profile, it brings your cash costs not dissimilar to that of Saskatchewan. And so the Kazakh crown of being the world's lowest cost producer is slightly diminishing in our view. On the nationalization side, this is really about them trying to take back control of their domestic resource. These guys are 40% of global supply. They signed a load of contracts that were not favorable to themselves post the collapse of the USSR. And this is about Tokayev, who's incredibly popular in Kazakhstan, saying we've got 40% of global uranium supply. We are indispensable in things like tungsten, in things like oil, gas, and we're not going to be signing partnerships or JV agreements that don't massively benefit our own state coffers. So this transition is been in motion for a couple of years. One thing that we did speak about last time was these transport routes, because they were so reliant on sending all material via St. Petersburg. That was their only option. They're now sending over 70% of their uranium exports via this Trans-Caspian route, and obviously some oil and gas and many other things. So they've really de-risked themselves geopolitically in the last couple of years.
Yeah, and so if you say, because everyone says Kazakhstan's the cheapest uranium stock on the market, the free float of Kazatomprom, but from an investment point of view and the nationalisation risk, is it like hard to put money into it?
You know, I've always said that it's something that we wouldn't own. My view has slightly changed on that because of a couple of reasons. First of all, it was always seen as pretty low beta to the rest of the market, i.e. when your US names are up 10, Kazatomprom's up 2. I mean, Kazatomprom's had an incredible run the last couple of years despite that. So I think that beta argument is slightly out the window. Yes, on a pounds out the ground versus market cap basis, or on an earnings multiple, it's the cheapest uranium stock on Earth. But again, it's, do you feel like you're getting sufficient risk reward from that? I think that argument it kind of changes every day with the uranium sector, and also with the announcements that they make, like METs, like changes to their subsoil use agreements. It's a really boring political answer, but it's such a fluid situation where it's like, I don't want to say today I would never own it, because I don't think that's true, right? Despite the 150 stocks, it's still a concentrated investment universe, and they are the largest uranium producer in the world. So it's something you can't ignore.
How much involved do you reckon China's going to be over there? Like, do you think Russia's just going to end up dominating the relationship with Kazakhstan? Because we'll get on to the Bannerman deal as an example with China's work. They've obviously still got JVs there, but are they going to steer clear, do you think?
So the rules, these new rules basically state that the end of the current JVs start with the fact that Russians and the Chinese have got significant interest in Kazakh uranium assets. These new rules, these amendments to their subsoil use agreements, essentially state that at the end of those JVs, now some of them don't end for 20 years, right? But there are some coming up for nearer term renewal. The end of those JVs, Kazatomprom have to own 75% of those JVs now. In a lot of the Russian Chinese JVs, they're minority shareholders.
Yeah.
Second thing is, if you want to do exploration on those sites, the Kazakhs have to own 90%. So what they're saying is you can keep what you've got to an extent while we have that current agreement. But if you want to do any exploration around that asset, and as you know, where there's uranium here, there's probably some uranium quite close, and a lot of these assets are able to build those deposits out via exploration, they're saying that's going to be 90% ours. The exclusion so the one way to get out of that is that the Kazakhs are saying, if you export conversion and enrichment technology to us, then we can maintain JVs similar to how they are now. And this is all about, going back to our first point of the conversation, is about President Tokayev's mentality towards bringing back their wealth domestically. They've tried to go into conversion. They've tried to go into enrichment. You've seen them go into fabrication via their Ulba facility. But really, they have this production cliff coming off in the mid-2030s. They're incentivized to keep pounds in the ground for a few reasons. It keeps prices higher. And they're about to build their own nuclear power plants domestically in Kazakhstan, which the Russians are going to build for them. So for them, when they look 20 years ahead, they're like, how do we maintain competitive in the nuclear fuel cycle? It's not just going to be in uranium. It has to be in UF6 and EUP, in fabrication. They want to become a rounded supplier of nuclear fuel to the world. And so that's sort of, how we think about why they're structuring those deals that way.
Is the heyday finished there in terms of exploration and the rich deposits? Are we going to, do you think, see a gradual decline in the quality of the ISR that's going to be coming out of Kazakhstan, or there's a lot more exploration potential that the Kazakhs are going to tap into, or what's your thoughts?
So, their 800-pound gorilla now is Budanovskoye, which will be the largest uranium mine in the world, they're very public about the infrastructural problems and the supply chain delays they've had in things like sulfuric acid, getting that ramped up. Outside of Budenovskoye, we don't necessarily see where does that next Budenovskoye come from. Like if they want to be, they're not going to be 40% of global uranium supply in 15 years. Put it that way. I just don't see how that's possible unless they're able to discover significant new Budenovskoye scale assets. In the current asset portfolio, a lot of the easy pounds have been mined. Again, that's just ISR for you.
That's mining for you.
Yeah, that's mining for you. And so they've been pretty vocal about that as well.
Now, state of the world, the vibe of uranium at the moment, and you picked it up from Grant Isaac on the Cameco call the other night. Even they say, everyone is sitting on their hands effectively at the moment, utilities and producers, but maybe with the exception of China, because we had the Bannerman deal come through the other day, which Bannerman got slaughtered for, really. It was in, tech's pulling off and uranium's linked to tech now. But it seems that China is not sitting on their hands. I believe looks like the West is. True or not? What's your take on it?
Yeah, I was at Indaba last week, which is 11,000 people congregating in Cape Town, the largest mining conference on the continent. I got to meet Gavin Chamberlain. I got to see all of the Namibian guys, Deep Yellow. I saw Global. I actually saw Gavin the day before this was announced. He's got a remarkable poker face, that guy. But look, the Chinese control Namibian uranium. They always kind of have. They have their share in Husad, Rossi. They have their share in Langer Heinrich. Now they have their share in Itango via Bannerman. And I think, I can't remember if it was with you guys, but I've been quoted as saying China has always been commodity greedy. I don't really say that in a negative sense. They're just very, very convicted on this nuclear build out. And my frustration has been there's been so much good rhetoric, like people saying they're going to do stuff, people's great headlines. You're seeing great executive orders. Like, we've not built anything really in the Western world in the last, since Vogel 3 and 4, if we're talking about the US. All of this net new nuclear capacity is coming out of China. So they are, again, in the same way that they dominate tungsten, they dominate rare earth, they dominate most battery metals. They're going to end up doing the same thing here, because they're going to own all of these new major assets on the continent of Africa. They're obviously expanding a lot into Kazakhstan and have become the largest off-taker of Kazakh uranium, significantly more than Russia. So it was not surprising to see that deal. As you say, I was maybe slightly surprised at the terms of it. Bannerman, I was properly blown away by speaking to the team there. That is a world-class management team. Gavin Chamberlain, who built Husab, the last new uranium mine to come online in the last decade. And so, I thought that was I guess that's one way to do it, but, massively de-risk their project. But, I guess I do understand the other side of the argument, which is, did you just give away a decent chunk of your asset that was unhedged pounds, and have you essentially just locked that up in long-term contracts? But as I understand it, they've maintained and they've said that they've maintained market-related pricing in a lot of that. But for me, the most important thing is that's just more pounds that are not coming to the West, right? It's crazy to not have seen at least a competitive bid for that, or maybe there was, and we just don't know.
Do you think it pulled back because of yes, they retained 52%, but the see-through value obviously appeared low. But do you think it was more linked to the tech, the money coming out of tech, which is obviously linked to uranium now? Do you think they're the de-riskiness of it now compared to Deep Yellow, as an example, takes a lot of, is it considering it needed about 700 million Aussie funding minimum to build it? Could be a punt.
Yeah, no, Yeah, I mean, again, I met the Deep Yellow management team, and they're impressive guys as well. Look, I think this is massively de-risked everything. It does give them an off taker. It gives them access to capital that they need to progress through Etango 8. I don't think this gets them to Etango 16 for their next stage of their project, but this is, and also going back to Bannerman, their management team was just it's a proper mining team, and you'll know who I'm speaking about when people get criticized for are these guys real miners and they want to take this into production. You hear that across various of these uranium developer companies going through the production phase. Bannerman are proper uranium guys. Deep Yellow, I felt the exact same, but also Namibia. They were telling me this is the 50th year that uranium has been mined in Namibia. It's a proper mining jurisdiction, and the Chinese see that and they say, "Well, we see that this is de-risked mining jurisdiction. I want as much as I can get out of there."
So onto Deep Yellow, the sister or the brother, you'd say possibly the big brother of Bannerman. What does this mean for them? Like, do they have a choice to not have the Chinese involved? Like, can they go it alone, or is there a bit of inadvertent forcefulness that goes on behind closed doors here?
I can't speak on their behalf. I'm trying to think what I would do in their situation is if you are surrounded by CGN, CNNC, all in that region, and do you want to send an American delegation into Namibia? Do you want to send an Aussie or a French administration into Namibia? I just think the path of least resistance for them would be to have a Chinese off-taker because that's just where they operate. And that's where they've operated for many, many years. But ultimately, they might see it as a differentiator. One thing that I do believe is that having a Chinese off-taker does limit particularly some US funds from being able to own you in decent size as part of their mandates. We used to work with Fission Uranium Corp and Ross McElroy before they got bought by Paladin. And that was a bit of feedback that we got on investor roadshows sometimes. It was like the CGN owned 14% of the shares. I just can't get that past my risk manager, particularly under the first Trump administration, where the trade war had really sort of kicked into a much more fierce gear than we see now. So if I were Deep Yellow, I would maybe see it as a differentiating factor to not use the Chinese, but they're going to do whatever's best for what they should do, whatever's best for shareholders, and whatever's best to get that project up and running.
Because there's not any world where I assume China want these ASX listed companies or whoever to be the operators. They don't want to. Do they want to operate it?
No, they won't. But I mean, well, you've seen the Chinese operating in Namibia on the actual operational side, of course, but not at places like, Paladin do their own operations. And I assume people like Bannerman, the way that Gavin was talking, will be doing their own operations as well. And then I guess to a different extent on each, the Chinese remain operationally involved as and when they feel they need to. But the construction side, I think, will be done externally.
Yeah, because what you got, so what Namibia you're going to have, you'll have Tumas, Etango, you've obviously got Rossing and Husab, which are operated 100% by the Chinese.
Yeah, and then Langer.
And Langer, obviously.
And exactly, Langer with Paladin.
Yeah. And what's the vibe on incentive pricing for these, places like Etango and Tumas, who are in the 200 odd parts per million for open pits? This is obviously a signal that they're going to start developing one of them, whether Deep Yellow follows, but it just doesn't feel like $90 a pound at the moment is going to really get that moving.
Yeah, I was surprised by that announcement when I saw it. I'm surprised today that still nothing's happening, and maybe this Bannerman announcement is what sort of kicks it into gear, which is that this is a moment in time. We're at $90 a pound uranium. What I loved about this recent retrace was when we went to 106 in January 24, the new low was 62. When we just went to 100 a couple of weeks back, if the new low is 86, then we're going to 125 pretty quickly. And so, I think certain businesses, companies will have their own. I remember UEC back, a couple of years ago saying we need 2 consecutive quarters of $60 a pound uranium. Deep Yellow may need to see another quarter of $90, but projects are new uranium projects are going to get the financings they need, whether it's the Chinese, whether it's the US, whether it's the French, whether it's the Indians, whoever it's going to be. So my view is that cost of production? I mean, what does the incentive price need to be? As you say, the grades are pretty similar to that of a Tango. These guys are ready to go for a 2029 production profile, 2029 production start. So maybe the Deep Yellow asset has got slightly higher costs than expected, but only they know.
Before we move out of Africa, Lotus, which are bloody burnt me, that bloody capital raise, I'll tell you what, seen it coming. But when the Lotus cap raise happened and that's when uranium was supposed to start taking off. It had 1 or 2 good days and $100 spot, and then it all shit itself very quickly. And they're raised at $2.15 and it's sub $2 now. How do you look at a company like Lotus, because there's not many people producing at the moment, to be fair. So they've got so much talk to the upside on any movement in price. I know they're pretty well contracted for the first year. Any goss on them and what's happening with that operation over at Indaba?
I didn't see Lotus actually while I was there. Look, this has been a name that we've looked at a couple of times over the years. I think it's quite rare to see dilution happening at this stage of their development. Where they're in production, they sort of done the hard bit, pretty low production profile in terms of cash costs. Malawi, I think, it doesn't have that same level as this is a properly safe place to mine as somewhere like a Namibia. It's definitely not a Niger. But I think that I think there's an element of a geopolitical risk discount that sort of sits on top of Lotus. But as you say, in a world where there's very few people actually producing any uranium, that really should have been a winner. And it feels like it's sort of snatching defeat from the jaws of victory at the moment.
Now, SPUT, they can buy £9 million a year, and I think they've bought 5 already this year. And that's the one thing that appears to. The only thing at the moment that's sort of moving the uranium market is the spot price, even though it's not the most important thing, but it drives the sentiment. What are they going to do when they've bought their 9 million already? Do they have a lever to pull that they can re-engineer that £9 million limit, or will they just go quiet in the market when they purchase it all?
Yes, I mean, if you take what they say as gospel, and I was with Pear last week, their £9 million limit is their £9 million limit. Now, the one thing I would say about SPUT is they have continuously shown the market how creative they can be when they're trading at discounts to NAV, whether it's their ability to raise capital at discounts to NAV, and to introduce strategic investors into those capital raises. These guys are the best in the business at what they do, bar no one. So I can't imagine Per and the team sat on their laurels sort of with £9 million in the trust and just saying, all right, we'll go on holiday from June till December, see what happens. These guys are going to find a creative way to keep generating shareholder value. I've been a SPUT shareholder since it was North Shore, and these guys have very, very rarely, if ever, let us down. So I would think that they've got a couple of tricks up their sleeve. I have no idea what they are, but
I was about to ask that. Have you got any possible hypothesis what they could engineer? Like, what could they do besides getting a shareholder vote to be bought out by someone?
So as I understand it, their £9 million is their limit on purchasing. Now, if they were to maybe sign offtake agreements with new nearer term producers, which gave them access to future pounds, lock in a price today, and you get access to future pounds in 18 months, 24 months time, that's the idea that I have in my head of like what these guys may be able to do. Essentially, a futures contract whereby you're not breaking your £9 million rule by buying more physical today, but an option on future delivery and locking in some prices. Now, there's not going to be many producers that I know or developers that I know that are going to be happy to do that because they see a rising price environment. But something market related, even where they could be buying at a discount to market at the time, that's essentially them doing their job in just doing it in 18 months' time while not sort of going beyond their £9 million purchasing a year. Now, I don't know if there's a clause in their contract that says they're not allowed to do that, but that's for me would be the obvious thing to do.
Yeah, going to be a tough time to do it when no one wants to engage in contracts, like including Cameco, exactly, as Grant says. Yeah. North America, mate, we've got another bloody 5 or 10. Phoenix, it's probably one of the up and comers. ISR in the Athabasca Basin. They reckon it flows through. Hasn't been done there before by the sounds. What's your thoughts on Denison?
Again, proper mining team. Dave Cates and the team that he's built there, they are phenomenal mining guys. Now, as you say, first ISR asset ever in the Athabasca Basin. That's not going to come without its challenges. But I guess the boring answer here is just because it hasn't been done before doesn't mean they shouldn't do it. They've got a better access to supply chain for ISR in North America than I would say they do in Kazakhstan, based off what we've seen from the Kazakhs the last couple of years. And I think that they've had a forensic focus on ensuring what we refer to always as the golden screw, like what's that one thing that we're going to need that we don't have, and just a forensic focus on that. Cash costs are strong, production profile strong. They're in the right area, access to the right mills. Well, they don't need the mill, but they've got access to everything that they need. And we also have a partnership with Ocean Wall with Sky Harbor Resources. You started to see Denison increase their obviously equity interest, but also their interest in a lot of those Sky Harbor assets, and that's all surrounding the sort of Phoenix asset. And so I think when I look at potential M&A in this space, I think that could be an obvious next step. And Jordan and the Sky Harbor team are best in class operators as well.
Any goss on how the hearing's going for Nexgen?
Nothing yet.
That should be pretty imminent, wouldn't it? Wasn't it going to be 5 or 6 days?
I heard early this week. But then this is the uranium rumor mill that we've been living in for 6 years. Believe it when I say it.
Yeah. Is that the thing I've asked everyone is if Nexgen is delayed, which it definitely will be, it's to sink those 2 shafts and freeze the ground, and just that's such a huge job then to develop an underground mine off that and the tailings storage. Like this thing is a mammoth project to develop. But you take those pounds out of the 2030 beyond market and delay them, which would increase the price of uranium possibly by the supply-demand squeeze, which would then just make Nexgen more valuable, wouldn't it, if they delay? Is it like this two-edged sword with Nexgen?
We've seen in the past, like Kazakhstan announced the production cut and the shares are up. Cameco announced the production cut, the shares are up. I don't know if I feel the same way about Nexgen, because both of those 2 guys are producing. The way that I would think about Nexgen is if they came out theoretically and said, our CapEx is double what we had estimated it was back in whatever it was, and this is a 2035 project. Yes, that's good for uranium prices, but does Nexgen still warrant a $6-7 billion valuation at that point? Yes, it's future uncontracted, mostly, obviously, significantly, mostly uncontracted pounds. But I don't know. I don't have the same view about Nexgen that I would about a Cameco or a Kazakhstan announcing a production cut. Like, this is a company that, yes, the asset's world class, but I think that at some point soon the world will realize that the production profiles and the timelines and the cost to do it all is just going to be significantly longer and higher.
Oh, and £30 million straight off the bat. What did you think of the short report that came out?
A lot of nonsense and some food for thought.
I think poking holes at the MPV was a bit weak, considering every mining company in the world fluffs up an MPV. It's a spreadsheet number.
Exactly. Exactly.
Mate, February lull, was that the goss at the moment? Not much buyers, everyone's on their hands and sort of linked to tech. When do you think, I think I heard you say in a previous episode, a couple of times a year you get these opportunities where there's a bit of a pullback in whatever commodity as well. It feels like this might be one for uranium. Is that how you're saying it?
Yeah, for sure. I mean, we had such a strong January. A load of news flow out the US just kept prices supported. We've seen spot prices cool off from a high of 100 to where we are at 90 now. I don't think that's a cause for concern. So much of when you see spot prices gap $10 in a day, that it's pretty trader driven. And so I didn't think that was a sustainable move at that point. But I think we're going to continue to see spot prices on that sort of same trajectory, and they'll support equities to an extent. But we've seen huge periods of decoupling where spot prices are strong, but equity markets are in a pretty bad way. And I think, we spend a lot of time trying to work out the correlation between uranium and the broader nuclear sector and the sort of AI tech theme. There is undoubtedly correlation, but actually there are some amazing names that really have nothing to do with AI, have nothing to do with tech. And these are really like sort of the proper nuclear value chain, bits and pieces. There's a company that we look at called Studsvik, which is listed in Stockholm. There's $100 million of sales. No one's ever heard of it. It's not in any nuclear fund, and it's just a consolidator of niche technologies across the nuclear value chain. This thing's it trades at 2.5, 3 times sales, and ultimately has proven a very low correlation to the volatility of what's happening in US equity markets. Those are the kind of names that we're trying to find as things get a little bit more volatile in US equity markets.
Do you think last bit, mate? Do you think Cameco is going to be one of the safer long-term performers, just with the Westinghouse JV or the Westinghouse holding, and the fact that they're going to be sort of making money off all the, as you said, the long lead items and the reactor build out before everyone really needs the uranium to put into it? Is that downstream side going to be the real thing that's going to separate them from the pack?
Yeah, 100. You hear the argument. I can't see much upside on a fundamental basis in Cameco. Like, you've got to own Cameco on a long-term view. They are the best operators in this sector by a mile. I had the pleasure of meeting Grant Isaac a few weeks ago and having a proper chat with him. He is just the way that he views the entire value chain, not just uranium. And the excitement around Westinghouse, me and him were discussing, Westinghouse, the day it was announced, shares were down 10%. Every earnings call that you sit on now, it's Westinghouse. These huge, bulky, yes, chunky, but lump payments that you get throughout the year. This reactor build out is going to happen, and it is going to happen. And Westinghouse are going to be a huge part of that, not just in North America, but globally. So Cameco remains a super exciting way for us to play this thing.
Yep, very good, mate. Thank you very much on your 45 minutes sleep for lending me your valuable time on LEVRD. You're a legend, Benny. Thank you very much, mate.
Of course. Great to see you, mate. Have a good one.